Good afternoon, ladies and gentlemen. This is Deb Strong at Financial Brokerage. I'd like to just take a moment to thank each of you that are on the call today. We appreciate your business. Want to just cover a couple housekeeping items. One is our 2019 incentive trips. There's one at the Broadmoor in Colorado, which is a fabulous 5-star resort. I've stayed there, and it is so cool. And that only requires $1.125 million of premium. The other one is a fabulous fishing trip to the Oak Lake Lodge in Ontario, Canada, which has only $875,000 of annuity premium to qualify for that as well. I'd also like to just touch for a second on something we call our agent referral program, which I like to call an agent's deferred comp program. If you refer someone to us that writes life, annuities, DI, long-term care, med subs, you as the agent that refers the other person can share in a bonus on their business over the next 10 years. So please be sure and ask me about that when you call, because it's a wonderful program and I hate to see you miss out on it. I'd also like to take a moment to introduce our host today, Cody Lodemeyer at North American Life, one of my favorite internals to work with, and we're going to talk about some wonderful opportunities at North American. They're one of our favorite business partners. So without further ado, I'll turn it over to Cody. Thank you, Cody.
Oh, of course. Thank you, Deb. I appreciate the warm welcome and love doing business with you as well. Today, I'm going to be going over the VersaChoice, which is a 10-year fixed indexed annuity that North American launched in October of 2017. So the product isn't quite a year old yet. However, year to date in 2018, it's our number 3 best-selling fixed indexed annuity for our foundation platform. So really excited about it. It's got multiple different benefits behind it and some unique features, especially some unique features when it comes to the liquidity rider. But let's kind of jump into what type of clients are maybe a good fit for the VersaChoice and really talk through how those clients are a good fit and then the product details behind that statement. So anybody who's looking for a simple base accumulation product will be able to have a home here with the VersaChoice product line. Anybody who's worried about future liquidity or unexpected expenses, needing a little bit of peace of mind that they can access their money, as fixed index annuities are a retirement vehicle. So generally people that are nearing the age of retirement don't want to lock up their funds for 10 plus years. Well, this opportunity provided by the VersaChoice product line and the enhanced liquidity rider can give them access to their funds a little bit sooner, and it actually can give them access to their funds plus a little bit of a step up or a bonus on top of that. There's also an income rider associated with the VersaChoice called the Income Pay Plus. We're going to walk through some of the different scenarios regarding the VersaChoice, and especially in the different aspects of accumulation, income, or the enhanced liquidity aspect behind it. Now, for the base accumulation product on the VersaChoice, about 38% of our sales year to date have come in with no riders associated with it. So what's that? Roughly about a third of the sales have no riders associated. People are using it as a base accumulation product because it has such a sweet and simple story. Well, some of the items that make it a sweet and simple story are going to be the rates associated with it and the different indexing methodology behind it. North American noticed a trend within our illustrations, in-force policies, that most allocations are actually put in the S&P 500 or the S&P 500 family. So you'll notice on your screen that there are multiple indexes available, all revolving around the S&P 500. So there is 3 different options within the straight S&P, one option within the S&P multi-asset risk control, which is that Mark 5, second one up from the bottom, and of course the S&P 500 low volatility daily risk control. Now, with having capped and uncapped strategies within this product, you're going to have multiple different allocations to choose between. Moving forward, we're not going to lock you into one or make you put all your funds into one and then kind of say, hey, you have to stick there. At each anniversary, your clients are going to have a 30-day window at the end of that to reallocate their funds into a different allocation method that they might seem more suitable for the upcoming year. Now, some items that I like to point out on this screen is the banding. You might notice that this is a banded product. It is going to be banded at $75,000 at issue. If the client opens up the policy with over $75,000, they would get the high band rates for the remainder of their policy. If it's open with under 75, they would be at the lower band rates. Some of the rates that I'd like to highlight that we are currently running right now are the S&P Mark V, which is a multi-asset risk control. It uses an annual point-to-point margin or a spread. Well, currently that's at 0%. So what does that mean? Essentially, the gross rate of return on that index is the net rate of return, because in the first year there is no margin or spread. And of course, the annual point-to-point participation rate on the S&P 500 sitting at that 45%. Of course, that's going to be very strong within the industry, especially when you couple it with some of the other benefits that are going to be available on this product. So now that we've talked about the VersaChoice and the base accumulation product behind it, not a whole lot to go into for an accumulation product. So I'm going to keep it pretty easy there, as that's not the true sizzle of this VersaChoice product line. What is the true sizzle is the enhanced liquidity rider. So I actually just looked this up. 50% of the sales coming in year to date have this enhanced liquidity rider attached to it. So that's a pretty significant number of cases that we're receiving, and it's going to be because of the different benefits that it's going to offer. The base product of the VersaChoice does have a 10% penalty-free withdrawal. I think we're all pretty standard, pretty used to that in the industry. Well, this is one of North American's product that does allow for a penalty-free withdrawal within the first contract year. Well, the reason why that's important is because one of the 4 benefits with the enhanced liquidity benefit rider is going to be based on a penalty-free withdrawal. Now, for a fee of 50 basis points, so an extremely small fee, you're going to get these 4 options that you see here on your screen. I like to think of these in quadrants. Quadrant 1 in the top left-hand corner, 2 the return of premium right below that, and then 3 and 4 over on the right-hand side. Now, everybody who purchases the VersaChoice product and adds the enhanced liquidity benefit rider for the 50 basis points is going to have the availability of the penalty-free withdrawal, or the enhanced penalty-free withdrawal, and the return of premium feature. So let's dive a little bit deeper into what the enhanced penalty-free withdrawal is. As I previously mentioned, there is a 10% withdrawal available in the first contract year of this policy. Well, if the client does not elect to take a withdrawal in a given year that one is available, the following year it increases to a 20% where it there caps out. Now, of course, if the client does choose to take a withdrawal at that point, the following year it does revert back down to 10, and then that cycle restarts. If no withdrawal is taken, the following year it increases to 20. If a withdrawal is taken, it's going to remain at that 10%. So now that we've touched base on the enhanced penalty-free withdrawal, let's talk about the return of premium feature. Now, when everybody hears ROP, or return of premium, every company offers this, not a ton of sizzle behind it. What makes North American different is we give a true return of premium on the enhanced liquidity rider. What do I mean by true? If the client gives us $100,000, doesn't take any withdrawals, we're going to give them their $100,000 back. So what does that look like? We're going to waive surrender, waive market value adjustment. North American will take back any interest that was credited to the policy. However, we will also credit back the fee associated with the enhanced liquidity rider. So there really is truly going to be no risk. That return of premium feature is going to be available day 1 of year 3. Simply stated, anytime after the second contract anniversary, your clients can choose to elect that return of premium feature and walk away from the contract. Now, the biggest question that I get in regards to the return of premium feature is, Cody, what's the chargeback period to my agents? Well, since the return of premium feature is available starting in the 3rd contract year, there is no chargeback to the advisor if the client chooses to elect that. North American only has a chargeback function within the first contract year of an annuity. So keeping that in mind, you don't have to worry about your clients using the return of premium and then getting a bill stating we need our commission back. That's not a problem at all. Now, these are going to be the 2 benefits that everybody gets no matter what if they purchase the enhanced liquidity rider with the VersaChoice product. If your clients have the ability to perform all 6 activities of daily living, or ADLs, they're going to qualify for quadrants 3 and 4, the two on the right, if you're looking at the screen. So the first ADL-based benefit is going to be a surrender charge waiver. So as long as your client can perform all 6 of the activities of daily living at issue, anytime within the contract, if they can no longer perform 2 of 6 ADLs, we receive a letter from a licensed physician stating so, and that the conditions are expected to be permanent. We will essentially check a button in our system, which will take them out of surrender and market value adjustment. Their account now is fully liquid to them moving forward at any point in the future. Now, why is it important that I said any point in the future? Because it's not a one-time withdrawal up to 100% of their accumulation value. It is going to be liquid to them moving forward, very similar to at the end of the surrender period. What does that look like? If your clients needed to take a 30% withdrawal and they've already elected this benefit, they're able to take a 30% withdrawal this year, maybe a 40% withdrawal the next year, 20% the year after that, and they're not going to have any charges, stipulations, market value adjustment, or surrender associated with it. So that's going to be a huge benefit, that it's just fully liquid moving forward, not just that one-time withdrawal. Now, the fourth benefit that clients are going to get in regards to the ADL-based payout, I think I do a pretty good job of explaining it, but truly the best way to show that is with a chart or graph. Before I go into that, this is the screen that my compliance team wanted me to show you. It basically states everything that I just covered, but in a paragraph form. I'm not going to make you read it. I'm definitely not going to read it to you. I just need to make sure that I do get that in there. You know, always got to be compliant, making sure we're doing the right things for the right people. So we're going to highlight those 2 of 6 ADLs. That last one that it highlighted down there at the bottom right-hand corner, number 4, that's the ADL Based Payout benefit. If we receive that letter from your licensed physician stating your client is no longer able to perform 2 of 6 activities of daily living and it's expected to be permanent, they have the option of turning their accumulation value into a 5-pay. Well, what's the sizzle between turning their accumulation value into a 5-pay? Depending on how long they've held the contract for with North American, they'll get a step up or a little bit of a bonus in regards to that. Starting in the 3rd contract year, if your client can't perform the 2 of 6 ADLs and they need to liquidate their account, but they don't need it all up front, they can choose this ADL-based payout benefit. We'll give them 110% of whatever their accumulation value is at that point, and we'll divide that over 5 years. They can take that monthly, semi-annually, quarterly, annually, really whatever duration or time frame that they'd like to choose that in. That does increase by 5 basis points every year, or 5%, until it caps out in year 6. So what does that mean? Year 6 and moving forward, anytime if your client can't perform the 2 of 6 ADLs and they choose to elect this benefit, they would get 125% of whatever their value has grown to, divided over 5 years. So they're essentially getting a free 25% from North American for electing this benefit. So really excited about that. We've touched base on the enhanced penalty-free withdrawal, the return of premium feature, the ADL-based surrender charge waiver, and the ADL-based payout benefit. Now, I think the hardest one to wrap your head around might be this activity of daily living payout benefit, and really to see some numbers behind it. Well, in this example, for $100,000 going into the policy, if your client chooses to walk away from their contract in the 6th year because they can't perform 2 of 6 activities of daily living, they can choose to take a lump sum of, say, $139,000 in this example. Well, if the client was able to take that over 5 years, they would actually get a payout of 5 payments of $34,944. So essentially, they're going to receive whatever dollar amount is over in that column. They're going to receive 5 of them over 5 years. So let's kind of back up here. The client has the option of choosing a lump sum of 139, or let's just say 140,000, or they could elect the benefit and receive 35,000 roughly over the 5 contract years. That comes out to roughly $35,000 additional dollars that your client is going to receive from electing this benefit compared to just walking away from their contract and taking a lump sum. So it's going to be a great benefit for those clients that can't perform the 2 of 6 ADLs, are going to need a significant portion of their funds, but they're also going to need those ongoing, as we all know that care can get quite expensive. And the beautiful part about this being based on activities of daily living is it's not going to be based on confinement. So there's not necessarily a confinement aspect to this. I know that home health care is becoming more and more popular as everybody wants to stay in the comfort of their own home and maybe have somebody come in and assist with some of their activities of daily living. Well, this product is going to be a great option for them. So now that we've talked about the enhanced penalty-free withdrawal, the ROP, the ADL Base surrender charge waiver, and the ADL Base payout benefit for a fee of 50 basis points, and that does need to be chosen at the time that the product is purchased or the policy is started, they're going to get all 4 of those benefits for a very small fee of 50 basis points. Most liquidity writers in the industry are going to be closer to 1% or 100 basis points, and they're going to offer maybe a return of premium and a penalty-free withdrawal. Nobody else in the industry has added these 4 benefits as we have within the enhanced liquidity writer and gave it such a great price to the client. So what have we touched base on? VersaChoice is a base accumulation product, how it's that simple chassis, multiple indexing options available, no fee associated with it. After that, we went into the enhanced liquidity benefit that roughly 50% of North American sales in this product come in with. Well, let's talk about the next aspect that I had spoken with in regards to the VersaChoice, but adding the Income Pay Plus income rider. This does have an income rider option available on it, and it's actually elected about 12% of the time in regards to North American. Now, the reason why that is going to be a little bit lower is because you can't actually elect the enhanced liquidity benefit rider and the income rider at the same time. So in case you missed that, you can only have one rider on the VersaChoice product at any given point. The Income Pay Plus income rider, some of the basic details regarding that are going to be the fee of 105 basis points. It's going to roll up at a compounding rate of 6% for up to 10 years. Now, that's a very traditional roll-up in regards to a lifetime income rider, and you do have to be at least 40 years of age in order to purchase that, and the earliest that you can start income is age 50. Of course, we have a fantastic sales support team that you can always call in, or of course, call out to financial brokerage, and they'd be able to provide you all this information as well. But I really want to touch base on what's the sizzle with the income rider. I could bore you with the details all day. Nobody wants me to do that. I don't want to do that. So where it's going to be unique, the client has the ability to choose a level or increasing payout at the time that they choose their income. So not at the time that they purchase their policy, because that does have up to a 10-year deferral period. It could be 10 plus years before your clients choose to take that income. How do they know in 10 years that they're going to want a level or increasing payout? I know my financial situation is, of course, forever changing and evolving, especially with how volatile our marketplace is currently. So this product isn't just going to offer them the level or increasing payout options. It's also going to allow them to choose if they want a single or joint payout at the time of the income election, the time that they actually turn on their income when they're truly going to need that benefit. Now, keep in mind, they do have to be spouses and they do have to be within the age requirements of the product. So there are some stipulations behind it, but they do have the option for choosing that level or increasing and then a singular joint payout, depending on the scenario. One of the biggest sizzle pieces of the Income Pay Plus income rider is the LPA reserve feature. This reserve feature is going to allow your clients to put money aside if they didn't need to take their entire withdrawal up front. Now, I'm going to touch base on this reserve feature in a little bit and give everybody a quick example of how that can work and benefit them in the future. But before we do that, let's talk about the nursing home multiplier. So with the VersaChoice, if you added the enhanced liquidity rider, you got ADL based benefits or activities of daily living. Well, if they choose to add the Income Pay Plus income rider instead, they would get a nursing home confinement multiplier, meaning if they do get confined to a qualified nursing home facility for 90 consecutive days, North American will double their income stream for up to 5 years as long as there's a balance in the accumulation account. Now, you might be thinking to yourself, Cody, that's not a hot topic on this product. There's multiple other ones that do it in the industry. Well, a unique part about our nursing home multiplier is going to be in regards to who can use it. It's going to be available for every covered person, and it doesn't have to be used 5 consecutive years. If you want to use 2 years, you still have 3 years of eligibility left. If the first covered person uses 1 year, the second eligible person would have 4 years of eligibility left. Now, say the first covered person used the year of eligibility, they also have the remaining 4 years available to them. So it's kind of that mix and match. It's very mobile, flexible, able to be used in a manner that the clients are going to need, not necessarily how the insurance company wants to dictate it. Now, some of the most important parts to an income rider are going to be that 6% compounding roll-up. Is it compounding or simple? What's the rate associated with it? But then also the lifetime payout percentages, because that's truly what you're going to use to calculate your income stream. Well, you'll see here, our lifetime payout percentages increase from age 50 to age 80, and they do increase every 5 years by 50 basis points. So you'll see some examples on this screen. If the client was a single covered person at the age of 65, and they chose a level payout, their lifetime payout percentage would be a 5.2%. That's going to be fairly strong within the industry from what I've come to notice. If they do choose to have a joint covered person in regards to that income stream, the lifetime payout percentage is going to be reduced by 50 basis points when originally calculating that income, because now we're covering 2 lives. And of course, as I mentioned earlier, that increasing feature that's available, if the client does elect to choose their increasing income, they are going to start with a lower lifetime payout percentage, which will calculate out to a lower lifetime payout amount, because every year in the future, it is going to be increasing based on a declared rate. As of the date of this webinar, that declared rate is currently at 2%. And if your client does lock that in, once that increasing percentage is turned on, it's never going to fluctuate. It'll increase at that, in my example, 2% every year moving forward for the rest of their lives, no matter what. So like I just said, no matter what, even if the accumulation value is depleted to 0 or the income account value is depleted to 0, they're still going to get that increasing income. Now, one item is illustrations. Every company has different illustration softwares. Now, I know there's a few in the industry that use third-party vendors, and North American is no exception to that rule. We do offer illustration software through a third-party vendor. I really want to kind of highlight how to read our illustrations. If you'll look here, everything on the left-hand side really pertains to the VersaChoice and the base contract. And anything that's in that green box towards the right, and that green box says Income Pay Plus at the very top of it, that's going to be in regards to the income rider. So we'll kind of start in the middle, right to the right of that green line. You'll see that 6% compounding roll-up for up to 10 years. You'll see what your GLWB value or income account value will grow by. And then based on the client's age, what lifetime payout percentage we'll use to calculate it, making it really easy and simple for you to see the math that North American is doing on the back end to calculate your client's lifetime income stream. And then, of course, keep moving to the right. The lifetime payout amount is going to be in that third column from the right. And also the LPA multiplier. That's essentially if the client can't perform those, is confined to the qualified nursing home facility for 90 consecutive days, we're simply just taking what their lifetime income is and doubling it and putting it in that column for your viewing pleasure. Now, I didn't put an example in here showing any of the funds going into the LPA reserve feature if the client chose to elect income, but just know that our illustration software does have that capability to put money into that reserve bucket. Previously, when the Income Pay Plus rider was launched, that wasn't an option. We put that in there to show you that the reserve feature was there, but we couldn't truly illustrate it. Well, with all the ease of business updates that North American has made in 2018, and we have made a lot, that is definitely going to be one of them. We're really excited about that. So definitely call in and make sure that you get an illustration ran. And if your clients don't necessarily need to take their full lifetime payout amount, go ahead and exercise that reserve feature to show them how strong it is. So you know how I mentioned that reserve feature? I'm not going to read this to you. That's a lot. That's a whole lot of numbers. What I am going to do is show you a little chart that basically goes over those numbers, just to let you know there are numbers that are going to be behind this, but let's kind of walk through what this chart is showing. There's going to be 3 different colored lines: a light green that's completely flat, a dark green that has a slight increase, and then a purple line or maroon that's very low and then spikes up really high. So if somebody chose a level lifetime payout amount, in this example, they're going to be receiving roughly about $11,000 every year for the rest of their life. And they have every right to take that $11,000 payment. However, if they didn't need that and wanted to leave their money in a safe vehicle where they're protected from market downturns and have that downside protection, they're able to, for a few years, put some money into the LPA reserve feature. If they choose to do that, the dark green line is an example of where Ed, the gentleman in this example, put some money into his reserve bucket for several years, and then a medical expense came up, or he had some travel expenses he was looking to offset. So instead of taking that lower lifetime payout amount, he actually kicked it up above where his level payout would have been in the past, because he has access to that reserve bucket at any point moving forward in the future. And it looks like he continues to take out that increased payout amount every year moving forward until it depletes. The third example is putting even more into this LPA reserve feature, taking even less of an income for multiple years. But then maybe you have a large expense. You want to go purchase a car, you want to re-roof your house, you want to go travel a little bit, or you want to pay for a grandchild's education. We all know how much a college education can be at this point. You have the ability to take a huge lump sum withdrawal up to the amount of your reserve bucket at any given point to you in the future. Like I stated, that is going to be 100% liquid to you moving forward. And because you didn't take the withdrawal from the income account in the first place, it also was left in your accumulation value, helping to preserve that death benefit or cash value in case of an emergency. Now, we have created a sales concept for this that is actually going to go into taking a $200,000 and splitting it out. But instead of going over that sales concept, I'd rather touch base on some of the base information on the VersaChoice. Now that we know that it's good for anybody who feel like a lifetime income stream, needs some enhanced liquidity options, or just are looking for a base accumulation product with no fee, it can definitely find a house or a home with the VersaChoice product line. The VersaChoice product is a 10-year surrender schedule only. So there's no 7, no 14, no 8, no 12. It's a 10-year surrender schedule, keeping it simple. Very little state variations between it. When we were creating it, we did put a $20,000 minimum for qualified or non-qualified in order to purchase the VersaChoice product. And that does have a maximum of $1 million prior to home office approval. Now, North American is known for having flexible premium products in the annuity market space. This product is not a single premium. We actually call it a modified single premium. So we will accept new deposits into the VersaChoice product anytime within that first contract year. Now, keep in mind, after that first contract year, we're kind of locking it down at that point, and it's not going to be flexible moving forward. Whatever the account value is at that point, there's not going to be any additional funds being able to be deposited in there. So 10-year surrender, $20,000 minimum, available in every state that North American does business in, including California. The only difference in the state of California is that they have not launched the enhanced liquidity benefit rider at this point. Now, I do know that we're finalizing the approval for that, and I would expect to see that launch very soon, hopefully within the next 60 days, but I can't make any promises. But according to my product filing team, they're really excited about that. So what does that mean? We're not going to really have any state variations. Every state's going to have the same surrendered length, the same riders available to it, the same enhanced liquidity benefits. They're all going to be that modified single premium, accepting new deposits in the first contract year. Now, we did not put a bonus on there because we just wanted that clean, simple accumulation product, also with those 5 indexing options that I had mentioned earlier. So now that we kind of touch base on that base product and some of the reasons that you would sell the VersaChoice product, let's talk about the people that are actually wholesaling it. I was privy to a carrier panel the other day where a different carrier had touted their longest sales support representative was 10 years. I kind of got my head scratching because North American could blow that out of the water. So I came back, went to the director of sales and was like, hey, what's the average tenure of our sales desk? She said within the industry, it's over 12 years. And we actually have several representatives who have been in the industry with our company for 17 plus years and 19 plus years. That's about when fixed index annuities really started coming around. We've had people from day one in the industry all the way through current time. So we have a lot of experience. Look forward to your calls. We're hungry for business. And if there's anything that North America can do to help, we're absolutely gonna. They can be reached at 866-322-7066. Now, Deb, this is where I'm going to kick it back over to you. I know you had some other housekeeping items that you wanted to mention. Also get the phone number available as well. I just kicked over the presentation to you. If you want to go ahead and accept that and get your guys' number up there, that'd be fantastic. And I'll kind of hand it over to you at this point.
Thank you, Cody. I appreciate it. I was making just some general notes during your presentation, and you did a great job. Thank you so much. But a couple key notes I took away from this is you really have very fair banding in this product, Cody. You know, $75,000 and over, that's very generous banding. You also have the Mark 5 indice that has the gross rate right now equals the net rate. That caught my attention. And low fees. I think one of my favorite things about this product is that it can be fully liquid if you have the riders on it that allow full liquidity, because that's something that I hear on the phone every day is, what if my client needs money and they need more than 10%? So that addresses that question. It's also very cool that if the client elects ROP, the agent doesn't get dinged on this because it's in day 1 of year 3. So they don't have to worry about a chargeback if the client has the ROP feature. And another thing is if you choose the income rider on this, you have very generous payout factors, especially if you're doing a husband and a wife. And who knows, lifestyles change. People want to know that they can get the most income, and your factors are very generous. So with all that being said, I want to thank everybody on this call today. Cody, thank you so much. North American is a wonderful business partner with us, A-plus rated carrier, and we are very fortunate to work with you guys, so thank you. Also want to quickly mention our 800 number is 1-800-397-9999, and I'm at extension 6328. Tim Schmadeke will be back in the office here in a couple weeks, and he's at extension 6319. So without further ado, I just want to say thank you to everybody who attended. Cody, thank you much, and thank you for your business.
Of course. Have a great day.
Thanks, Cody.